Welcome to Commodities, and here we're looking at gold. And look, the wave count at the bottom here is really quite sort of choppy, but it's offering a sort of ending sort of triangle sort of pattern, essentially looking for support. It's not actually trending down, so it does have some support on that 240 low there, and yeah, look, we could expect a move up from here. It could move back up to the wave 4 of one lesser degree, which would be here. But in a bit of a nutshell, we're looking for some type of correction in this particular area here, and it's all really got to do with the 1250 here, the midpoint. So yes, just looking on this on a 5-minute chart here. Look, the whole thing's not clear, but if I got into the guessing game, then I would have to call this up for 1 and back for 2 here. So as long as the market stays above the 1242 here, then we may see an impulse wave move to the upside. See, this wave here is an impulse wave to the downside. So unless this move up through here takes out this high here, then this impulse wave is still valid, and this could be an A and a B and a C and fail from here and move down. But when I was looking at this morning, I mean, this is all a bit new here, but I could see that this was a corrective pattern in here. So at least I could see there was further upside there. How far it's going to go, I don't know. But the daily stochastics are oversold. So if you wanted to take a sort of a higher risk trade, then the stop would just be under the 1242 area here. Well, you could even put it under the 1243 now. This 12 should be on 1245 here. So yeah, look, if this develops support on the 1245, the 5's the midpoint, so nice solid support here. You might want to glean a small position to the upside, but just understand that you're buying on the low. We're not sure how far this will move to the upside. It should have a crack at retesting the 250 here, the midpoint here. Anyway, let's just see how that goes. I won't put it in as a long trade, but if you had to take a bet, well, then that would probably be the side of it. But wait for a nice solid support on the 1245 here. The silver market is a little bit different, as you know. So we're looking for wave 4 and a wave 5 down through to here. This little move up through here, it appears to be corrective. Yes, it can go further because this little move down through here is in 3 waves as well. So that's corrective, so you can move back up here. So it just appears that this whole move here is corrective, and if we've got it right, then it would be a wave 4. They can pull back to the wave 4 of 1 lesser degree, which would be in this area through here. So a move off the 1872 at this stage. The daily's oversold as well, so a bit of support there for that. But they're not really. They're just probable turning points within a market. They're not sort of trends that we're looking for as such. The copper market, well, we know that if I just go back here to the daily, and I've probably harped on about this a bit, but 61.8% is the 320 area of this move down through here. We know that this is the supply here. The move up through here can be counted as an A and a B and a C, or it can be counted as a 1, 2, and a 3 as well. So this move that's occurring here, it could be a wave 4, or we may have a top in the market. Okay, so currently I'll treat it as a wave 4 unless the 310 becomes the retested resistance, and if that's the case, then we'll look at this being a top, and of course this would affect the materials sector even more so from there as well. So just sort of drilling into that a little bit, we've been looking at tracking the 5-wave sequence, up into the 320 area, and now we're looking at a move down through here. This little wave 5 could also be placed here as well. I just need to reassess that, but 5 waves here would see a counter trend here, and then another 5 down through to here. So we should see this bounce off the 310 or close to it anyway, you know. So let's just allow that to complete. This 315 here will be important as well, because if this does complete here and then find support back up here, then we know that this high here will be taken out through here. So we just really need to see what's going to occur here. You know, on the downside here, if this, we're actually looking, if you want to pull it apart, we're looking for 5 waves here. So there will be some sort of bounce off here anyway. But if it moves down after that, then we've got a problem at that point, here. But we'll know that when we see 3 waves here because of a move here, we'll know that we're in a bigger bear market at this stage, and we can go down and take out the 300 low here, even a move down to 280. So we just need to be a little bit careful of what we do have here, and this will affect the materials sector as such. The oil market is pretty much on track of what we expected. The 61.8 is down at the 101. However, we know there's really good support at the 102, so we're expecting a bounce here, and we're getting a bounce here, and this bounce here so far looks corrective, but let's just give it a little bit of time, because this move down through here, I don't know, it doesn't count very well. I could make it fit a count, but it's doesn't really have a very clear count. And if a market has a very clear count, well then, we can use it with confidence. If it's all sort of iffy, then it's best to leave Elliott alone and then just revert back to support and resistance. So let's just observe what this bounce is off the 102 area through here. Like I mentioned before, that even though we've got a bearish sort of view on this is across the 103 here, and this is the top of group 1, and this is a bit of an overshoot pattern here. So we could diminish into the 103 and find support and continue to move up. We're seeing gas move up now as well. It's a little bit, this is the high for gas. This is the 61.8% at the beginning of Group 2. Group 2 would be 465, then 472 and 480. So it's moving into the supply area of here. And also, obviously, the resistance and the 61 points. So we really need to see this get past this. If the 470, 472 becomes support, then we can look at this being a bullish market as such. The daily would have this oversold at this point. So there's going to be resistance here anyway. We just need to work through it. That's what we want to... It's just what we need to do. And, if we do get support on the 142, well, then we can look at 172, then we can look up at $5 and we'll trade that long from that point, probably even higher into 520, of course. The soybean market, it's sort of also on track as well in terms of shorting it through the 1490. There's going to be, at all these lows through here, there's going to be supports here. The move down here, if you are shorting, it needs to be acknowledged that that you're trading short within a correction, within a C wave of wave 4 that can pull back to this wave A through here. And we're looking for 5 waves down here in terms of 1, 2, 3, 4, 5. We've got down for 1 and back for 2. So we're in the third wave. And the third wave, just coming back here, the 1, 2, 3, 4, 5 for wave 1, the A, the B, the C, back to the 50, 60% retracement level. And from wave 2, we're looking for wave 3 to come down. Now, it's going to be a little bit tricky from here because we've got all this, support here. And, this will play out as well. So, we can expect bounces back from this level to this level here. Before we see any further downside. But the pressure is to the downside, and the indicators are suggesting that as well. I just find it's always a little bit difficult around, around whole numbers. It gets very choppy. It's not sort of what we're really looking for as such. But, hey, that's where we are, and it's what we've got to work through. So the wheat market... Well, obviously it's going to be moving closer to the 600 here. We're still looking at this as being a wave 2 move here, covering this gap and coming back into the 600 here. We're doing our best to count 5 waves down through here. So the corn and the wheat and, there's other markets, well, just the commodity index. Let's have a look at the commodity index for a moment here. This is the commodity index. It's a UBS one, a bit like the CBR one. This is a daily chart here, and this, we've looked at this before, and yes, look, we're just expecting, we're looking at 5, it's actually 5 waves from this point here up to this point here, and we're looking for a wave 4 to pull back to the wave 4 of 1 lesser degree. So we can see that this, it's been quite a few days here. So this is quite a, it's starting, the first leg down here at least is starting to mature somewhat. There'll be more to this as well, to the upside. We just need to allow this sort of wave 4 to pan out here. And this is a basket of commodities, so it's got grains in there and metals and so forth. So nothing really to do here, and the same with corn. We're looking to be short on corn from the 1265 retest, so if you've done that, the 450 is the target here. And once again, it's in the same sort of boat as the wheat market, so we're just sort of spruiking for lows and just need to wait for that to pan out. This is the coffee market here, and look, once again, we've basically got we've got 5 waves up through to here. We're looking for some type of correction, at the major trading level here. Yeah, we can see that it's over, moving into the over sold area through here. This is the 50-60% retracement level here. So once again, we're waiting for this to complete as well. Once this is complete, or all these commodities complete, we'll be looking to buy on the the next swing to the upside. So it's all falling into place. It's pretty exciting, really. Just time. The sugar market, it's still holding its low in place. Unless the $17 becomes the retested resistance, then this market can move up from this particular low here. We just need to basically just wait. There's been no movement in it since overnight practically, so just I won't go on the intraday there because it was 17.13 when we looked at it yesterday as well. The orange juice market, there's a bit of a buying opportunity here because this move up through here, through into the supply area, what it's sort of done really, it's I kind of knew it anyway, but I just wanted to get through the supply area because this move here is in 3 waves, and it was really in sort of 3 waves even when we were to here, but I really wanted to see a clean and a close above the 160 here to really set this in concrete, this sort of corrective 3-wave price action here, and that being the case, we should take out this low here at 167.50 or whatever it was, 167.50. So we can be looking at the 170, the 172 area through here. So buying, above the 160 here, 162 to 163, whatever, and keeping the stop rather at the 156 for the time being, because the 160 hasn't been retested as support, so we don't have an exact price point that's been tested and the orders are sitting there as security, and we can go under those orders, under the volume for our stop. It's just not there yet, so we need to keep it a little bit of distance on it, but all going to plan. We'll see this move up higher through here, so a buy on here. The daily stochastics will be overbought rather at these old highs here, so there will be a resistance coming into 63 to 65 here that can force it back and be a bit of a struggle, but the momentum for this is to the upside, so let it breathe, the US dollar, as you know, I haven't got the count on this particular chart. You have to go to the Forex, but we're looking for a top into the group 2 here, the 80, 65, 72, and the 80, and possibly up to the 81 up through to here. and we'll continue that projection up into this area here. However, if the midpoint here, the 50, becomes the retested resistance, then we'll start considering a top being in play. But at the moment, it's doing everything that it's supposed to be doing, looking for support on 50, and it is what it is. But it's in a positive position at the moment, and it can push higher. If that 50 becomes the retested resistance, then we'll have a negative mark on that. We're still expecting commodities to come down further. We're still expecting the US dollar to go up further. So perhaps they'll all sort of turn at the same time, or at least have some sort of influence on each other to some degree. But it's nice to have all those things lined up. Alrighty, well, that's it. Cheers.